Hi, this is James Sugg at Westpac with the end of day report from London for Wednesday the 8th of August. Another pretty quiet day really on the data front with just some relatively minor figures out of the US economy on productivity. They're largely derived from figures that are already published. They showed accelerating productivity. That was because GDP growth slowed in the second quarter, but jobs growth slowed even faster. So there was slower growth in output derived from even weaker growth in hours worked. So not particularly the best of all worlds, even though it delivered stronger productivity growth and also lower unit labour cost growth. So as I say, derived from figures we already knew about, so no real surprise. We did have comments from the Dallas Fed's Fisher. He said, in contrast to his colleague Rosengren yesterday, who would like to see more Fed stimulus, he said that there was already adequate stimulus in place. In Germany, we had some weak exports and industrial production figures for June, both showing declines, partially reversing their previous monthly gains that we saw back in the May data. And in the UK, we had the Bank of England's latest quarterly inflation report, where that showed inflation in 2 years' time likely to be a little bit below the 2% target, assuming the asset purchase program is held at its current target of £375 billion, and also assuming a further rate cut, which is what's currently priced into the market. That's how they determine, that's what they assume, market pricing, when they determine their central projections. So that implies that there's still some scope possibly for further easing. Not necessarily another rate cut, but maybe a further extension of the asset purchase program. And the commentary from the governor was pretty gloomy. He says that the UK economy will continue to face headwinds over the forecast period, ranging from fiscal consolidation and tight credit conditions at home, difficulties in the euro area, and a broader slowing in the world economy. The recession in Europe is damaging for exports, and there's a black cloud of uncertainty hanging over investment. And the weakening euro being another factor constraining the hopes for rebalancing of the UK economy. So the Bank of England's efforts to bring about a rebalancing of the economy are going to require patience, and their forecasts embody the likelihood that UK growth will be below trend even in 2 years' time. Of course, that's created various political issues here in the UK, with the opposition arguing that the government should pull back on its fiscal austerity, although the governor of the Bank of England actually seemed to support that, or reaffirm his support for that program. That's it in terms of news today. In terms of markets, it's just coming up to 5 o'clock in London, just before the close. We've got the FTSE unchanged on the day, the French market down 0.4%, the Germans off 0.2%, the Spaniards off 1% today, and the Italian market, I think it was closed today. And the US market, the Dow, currently up 0.25%. That's at 13,199. In terms of commodity markets, the copper price is down 0.25% today. Gold's up 0.25%, and oil's up about 2/3%. Aussie dollar's a little changed at 1.058 against the US dollar. Speaking of Australia, it's the jobs report at Thursday, looking for a 15,000 increase in employment and a slight rise in unemployment to 5.3%. Okay, that's it for today. Back tomorrow.